Let's talk to Mike Van Dulken. He's the head of research at Accendo Markets. Morning to you.
Good morning.
Mike. Right, 3 thoughts-provoking slides as always. Let's kick off without further ado on the first one. Tritax Big Box REIT PLC. What on earth is this all about?
So this is what's called a real estate investment trust.
Yep.
So it's actually very similar to the likes of Amazon, British Land, Land Securities. This one's on the FTSE 250, so it's a bit smaller. But the reason I like it is that the fundamentals are just so easy to understand. We're buying more stuff.
We are.
That stuff needs to be delivered,
Yep.
both to the country and to our front doors. When it lands in the country, it needs somewhere to go in the meantime, i.e. a big warehouse. That's what these guys are in. Very similar to Segro, if you like, on the FTSE 100, who consistently talk about the need for a drop-off, if you like, before the local delivery. So this is just another one where I think the internet economy, the big consumption, as I said, we're consuming more and more, buying more and more. It's in a long-term uptrend, very similar to the likes of Big Yellow Group, etc. These storage companies, we need places to put that stuff as well. Both the stuff we buy and the stuff we are buying. So I think long-term, the fundamentals, as I said, are very, very easy to understand. We've had a long period of consolidation, April through April, followed by a breakout. We're looking for that support level to hold up. If it does, very easily upside to the recent highs. If not, potentially, maybe another pause for another breakout.
Okay, so old resistance into new support on the technicals.
Resistance turns support, yeah, that's right.
Okay, in terms of volume, much going through?
It's okay. I tend to look at stocks which are trading around, £3 million plus a day in terms of, rather than volume of shares, the value of the volume.
Okay, that's a good
for
point.
Me, 3 million tends to be, enough for you for the average retail client's position to be to not move the market.
Understood. Okay, let's move on to the second one, InterContinental Hotels Group. This has been on a good run in recent years.
Yeah, again, in another range there, between 4,600 and 5,000. A bit of support there. We're hoping that leads to a continuation of the uptrend. I do wonder whether it needs to move sideways to catch that rising trend line again. But otherwise, I think it fell recently. I think we had some concerns about the weather impacting people's desire to travel. We saw Thomas Cook this week say, especially in the UK, the hot weather was meaning people were happy to stay at home, and they were looking more for a late bargain, which may mean they have to discount later in the season, which is not really what they want to have to do. But these guys are more geographically diverse. Big hotel chain, and I think long term the things sound to be okay. And I think the uptrend has potential to resume after that period of consolidation.
Okay, and the key chart point here?
I think whether the 4,600 level holds up either right now or indeed where those two trend lines cross, which could be another few weeks away.
Understood. Okay, let's wrap up with the third slide. The Royal Bank of Scotland Group PLC reported this morning dividends.
It would be rude not to talk about RBS today. The biggest news in London, I think, today is that RBS is finally, its intention is to resume dividends. It is contingent on settling fully
PPI,
with the
etc., etc.
Well, no, it's actually with the US Department of Justice.
Yep.
So long as that claim, that settlement is signed off and finalised, they intend to resume with a dividend of 2 pence. So as opposed to Lloyd's 1 pence, but 2 pence on a £2.50 share price is not the same as a 1 pence on a 60p share price.
Yep.
So it's not quite the same, but it is a sign of recovery. It would only be doing so if it felt confident. And the results this morning showed less profits than last quarter,
right,
but much more than the market was expecting. In fact, some of them were expecting an operating loss. They came in with a profit. The litigation impairments were well flagged from May. So yeah, it's a good start, and I think maybe the share price had been bouncing in anticipation of something positive. We see them trading up again today, testing recent highs. If the momentum gathers, there's no reason why those shares couldn't go back to that long-term falling highs trend line around 285. You're talking like something like 10% plus upside.
Understood. And finally, FTSE 100, much going on.
Yeah,
Buyers coming in.
We've seen that sharp retreat all the way back to 7,600 and below. We were as low as 7,540 yesterday. It did bounce, so that was 3-week, if not 4-week lows. It sounds a lot, 100, 150, 200 points from the recent highs, but just zoom out to a longer term chart and look where we've come from. It's a very
minuscule,
small, minuscule correction, if that. Looking at what's moving the index, the miners are struggling on the back of China growth concerns, lower metals prices, a stronger dollar. The weaker pound, unfortunately, isn't really helping. It was actually weaker yesterday after the Bank of England rate hike because everyone was expecting it, and in my view, it was a dovish hike. And of course, while that might help the banks a bit, it hurts the likes of the house builders, hurts the likes of the retail, which because borrowing costs are you're likely to see your mortgage rate go up quicker than you see your savings interest rate go up. So for the moment, we're looking for potential for a revisit of those 7,540 lows on the FTSE. If that support holds, then we've got upside to the recent highs. It kind of all hinges, unfortunately, on Donald Trump and how aggressive he wants to be on tariffs towards China.
On that note, Mike, thank you very much indeed.
Thank you.